All right, let's say this up front. If your QuickBooks technically works, but you still can't answer which jobs actually made money and which ones quietly drained your bank account, this video is for you. Because I hear the same thing from contractors all the time. We're busy, money's coming in, jobs are booked. Then I ask one simple question, which jobs were actually profitable last month? And 9 times out of 10, there's a pause. Not because you're careless, it's because QuickBooks is set up in a way that hides the truth instead of showing it. Today, I'm walking you through the exact QuickBooks Online setup and workflow that actually works for contractors. This is the same setup I use with clients who want to stop guessing, stop redoing work, and finally trust their numbers. This isn't about buying more software. It's not about becoming an accountant. It's about setting up what you already have the right way. You can do this in one afternoon, and once it's done, every job you run will finally make sense. Before we start though, let me be clear who this is for. This is for construction business owners doing roughly 20 to 100,000 a month. You're running jobs during the day, handling admin at night, and you don't have time to babysit QuickBooks. You just want numbers you can trust. That's it. Before you touch accounts, before you look at reports, before you try to job cost anything, there are 3 settings inside QuickBooks that have to be turned on. If you skip these, nothing else works correctly. Go to your gear icon, then accountant settings. First setting is progress invoicing. Turn it on. Most contractors don't bill once, you bill in stages. Deposit, progress payment, final invoice. If progress invoicing is off, you end up duplicating invoices, guessing percentages, or manually splitting things later. I've seen contractors rebuild the same invoice 3 times because this was off. Turn it on once, save yourself hours forever. Second setting, show items table on expenses and purchase forms. Turn it on. This one is huge. Categories tell you where money went. Items tell you what the money was for. Job costing does not work without items. If this setting is off, every report you run will look wrong and you won't know why. Third setting, projects. Turn it on. Do not skip this. Customers are who pays you. Projects are how you measure profit. If you only use customers, all your jobs blur together. You'll see revenue and expenses, but you won't see clear margins per project. Once these 3 settings are on, now we can build something that actually works. This is where most people either overcomplicate things or keep everything so loose that nothing lines up. We're keeping this simple and tight. Go to your chart of accounts, create at the minimum these 3 accounts under cost of goods sold: direct labor, subcontractor expense, job materials. You also want to include equipment rentals, permits. Here's why this matters. You want to differentiate which part of the project is not going as planned, which parts you went over budget on, so there's no guessing, and it's all in one place for direct costs. Now go to products and services. This is where job costing either works or completely falls apart, trust me. Create items for each of your cost codes. The more detailed you are, the more work it is to track your actual costs, but the more granular you can get when it comes to budget versus actual. Next step is to map every item to income and expense accounts. This setup lets QuickBooks show profit by job and by cost type without extra work later. Here's a mistake I see all the time. Contractors code job costs using categories only, not items. What happens? Costs never roll into projects, and the projects might be looking profitable. Arguments start, trust disappears. If job costing matters, always use items. If there's anything I want you to remember, it's this section. The customer is who pays you. The project is the job. They are not the same thing, and treating them like they are is one of the biggest reasons contractors can't see the profit clearly. Think about a repeat client. Same homeowner, same developer, same GC, but they might hire you for 3 different jobs this year. If you only use the customer and don't create separate projects, all 3 jobs get blended together. Labor from job A mixes with materials from job B. One job might make money, another might lose money, and QuickBooks shows you a fake average that feels fine. That's how you miss problems. Now, here's the clean structure. The customer is the folder. Each project is separate file inside that folder. Kitchen remodel, bathroom remodel, addition, all new files. Every job, every time. When you create a project under the customer, QuickBooks starts tying everything together automatically. Estimates, invoices, bills, labor, and payments all live inside that one project. You're no longer hunting through reports trying to remember which expense belonged to which job. This also helps you see profitability and budget versus actual reports per each project separately, and you get a dashboard showing your profit margins. Projects don't just help with reporting, they change how you think. When every job stands on its own, you start asking better questions. Why did labor run long on this one? Why did materials spike on that one? Why does this type of job always feel tighter? Estimates are where most contractors accidentally break their job costing before the job even starts. Not because they price badly, not because they're dishonest, but because the estimate is built for the client, not for the business. You actually need both. When you build estimates in QuickBooks, you've got 2 clean options. options. Which one you use really depends on the client and the type of the job. Option 1 is detailed estimate. This is where you break everything out. Labor as its own line, materials as its own line, equipment. This works well when clients expect transparency. Commercial work, cost plus jobs, or clients who are already used to seeing detail. The upside is clarity. The client knows what they're paying for, and your numbers line up perfectly with job costing because every line maps back to the item. The downside is that some clients fixate on line items instead of the total. They'll question hours or unit costs without understanding the full scope. That's where option 2 comes in. Option 2 is a lump sum estimate using bundles. This is the cleanest setup for most residential contractors. You create a bundle called something like project cost. But inside that bundle, you include labor, materials, equipment, permits. You mark the bundle so the details are hidden. Then the client sees one simple line item, no distractions, no debates over individual costs. What you see is everything. Labor will track labor, materials still track to materials, equipment still tracks to equipment. Your reports stay clean. This solves a huge problem. You look professional and confident on the front end, and you don't sacrifice job costing on the back end. Here's why this matters long term. If your estimate structure doesn't match how you track costs, QuickBooks can't tell you if you won or lost on the job. You'll collect money, pay bills, and still have no idea where things went sideways. When estimates and items match, everything downstream works. Progress invoices make sense. Change orders are easier to price. The reports actually mean something, so don't choose between looking professional and knowing your numbers. Set your estimates up so clients feel confident saying yes, and your books can tell you the truth once the job is done. That's the balance. This chapter is where a lot of contractors accidentally lie to themselves with their numbers. Not on purpose, it happens because invoicing feels like just getting paid, when in reality, how you invoice controls how clean your books stay for the entire job. Once an estimate is accepted, here's the workflow you want every single time. You convert the estimate into an invoice, not a new invoice, not a copied one, convert it. From there, you invoice in one of the two ways, by percentage or by line item. If you're billing by percentage, always add a short description at the top of the invoice, something like 35% to commence or progress billing through framing phase. This matters because quantities on the estimate rarely match real-world progress. Without that description, clients get confused. They ask questions and your admin time explodes. Now, let's talk about the deposits, because this is one of the biggest reporting mistakes I see. Deposits are not income. They are money you are holding for future work. That means they belong on the balance sheet as a liability, not on your profit and loss. The clean way to do this is to create an item called customer deposits and map it to the liability account. When a client pays a deposit, you record it using a sales receipt with that item. Nothing hits income yet. When the job is complete or you send the final invoice, you subtract that same deposit item from the invoice. Now income only shows up when it's earned, not when cash happens to land in your account. This one change alone can completely change how accurate your reports are, especially if you take large upfront deposits. Clean invoicing keeps revenue honest, and honest revenue keeps decision-making sane. This is where profit quietly leaks out without anyone noticing. Most contractors think they have a pricing problem, when in reality, they have a cost capture problem. Every single cost needs two things: an item detail and the project selected. Every line, every time. If you buy materials at Home Depot and that receipt covers multiple jobs, you gotta split it by item, by project. Yes, it takes an extra minute. That minute can be the difference between knowing a job costs money and guessing why cash feels tight. Labor works in the same way. If you do not run payroll through QuickBooks, you can still set hourly cost rates inside projects. That gives QuickBooks a way to estimate labor costs so job reports are not empty. If you do run payroll, this gets even cleaner. Use QuickBooks Time and assign hours to projects. When payroll runs, real labor costs, including taxes, flow directly to the job. Costs do not magically attach themselves to the job. You have to tell QuickBooks where they belong. Most contractors are either overwhelmed by reports or ignoring them completely. Both are problems. You do not need 50 reports, you need a few that tell the truth quickly. Start with the project's dashboard. That gives you income, costs, and profit by job at glance. No exporting, no filtering, gymnastics. Next is project profitability report. This is where arguments stop. When you group this report by item, you can see exactly where money was made or lost. Labor, materials, or maybe equipment. No more guessing, no more feelings. If you are on QuickBooks Advanced, the estimates versus actual report is a game changer. This shows you where labor or materials are blowing the budget before the job is done, not after the damage is already done. Work in progress is the final layer. This helps normalize what has been invoiced versus how complete the job actually is. It shows underbilling and overbilling, so cash flow issues are not a surprise. QuickBooks is not perfect for work in progress, but Advanced gets you close enough to make smarter decisions instead of reactive reactive ones. So what are the most common mistakes that kill margins? Let me call these out clearly because almost everyone does at least a few of them. First, items mapped to uncategorized income or expenses, then using categories instead of items for job costs, projects turned off and ignored, deposit treated like income, cost tagged to customers instead of projects, payroll tracked outside QuickBooks with no reclassifying, receipts sitting in glove boxes or in boxes, change orders leaving an email instead of being documented, expecting QuickBooks to manage your entire operation. QuickBooks is a financial software. It's not a full project management system. When you use it for what it is good at, it works incredibly well. When you expect it to do everything, frustration follows. You do not need every tool on day one. Stay on QuickBooks Plus if your jobs are simple. You have one crew and billing is straightforward. Move to QuickBooks Advanced if you need estimates versus actual, work in progress style reporting, or custom fields on projects. And Builder Trend or Job Trend if you are over $1 million in revenue and need full project operations tied back to the accounting. Tools should support clarity and not create more work. Let's simplify this. Turn on the 3 settings, map item correctly, use project, invoice with clarity, capture costs by items, run the right reports, and that is it. If you want this implemented specifically for your business model so you can stop doing $25 tasks at night, tap the link in the description to book a call and see how my team and I can support you. You deserve to know which jobs actually make you money. See you in the next video.